Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, February 15th, 4:34 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend, some good action today if you're a bull. Check over here at the trend gauge. Leaders acting really well. Showing bullish with the green arrow. Short term, all five of the major indexes are above their 21-day exponential moving average, so we get a green arrow there. Also above their medium-term 50-day moving average, get a green arrow there. Long term, we've got all four indexes basically flat. The SPY, it's a couple pennies either way. The S&P 500, a couple pennies either way. Dow, same thing with small caps. MDY has the strongest slope up. So although all five of the indexes are above their 200-day, we want those lines to turn from downtrend to flat where they are now to uptrend to provide more confidence for this rally. It also provides more support when you pull back to a moving average and you're pulling back to a positive sloped line. It tends to act more strongly as support. So what happened today? Gap down in the morning, wasn't looking good, but the bulls saved the day again, ended up rallying little by little all day, closed at the high of the day, and great action by leaders, including stocks that either gapped up today or recently gapped up and continued to make higher highs. Definitely strong action out of leaders. Here are the final numbers. G6, this is our growth proxy composite, positive, up by 1.6% today. S&P 500, not a big number, but high of the day, up 0.28%. NASDAQ 100, up 0.8. Dow, up just 0.11%. Mid caps up 0.7. Russell 2000 led the way, up 1.1%. Global diversified 60/40, drugged down by emerging markets and foreign developed stocks that were weak on the day, and bonds also priced down, meaning yields higher. Global diversified 60/40 down 0.08%. In-house GROTECTION up 0.56%. Some good action out of a lot of our individual stocks that we own today. We'll take a look at a few of them when we hit the tail of the tape. So let's get right into it. Revere Asset Management, active management. We participate in the upside. Our flagship portfolio is named GROTECTION. Means we're growing assets when the market is trending higher. We protect them when the market is trending lower. Why do we do that? To keep you away from these brutal losses that you can get during bear markets. They all occur below the 200-day moving average. We place a lot of emphasis on being defensive when we're under the 200-day moving average. Normally, high to low or high to a break of the 200 is on average a 12% loss. That's fairly easy to recover from. These losses, what happened under the 200-day, these are what are not so easy to recover from, especially if you're approaching retirement. So if you like this common sense approach, what other aspect of your life when things are going bad do you just ignore it and hope it gets better? No, if it's raining, you take an umbrella. If your service engine soon light comes on in your car, you take it for service. That's what we do here at Revere. We diagnose unhealthy markets and get the heck out of the way and wait for a healthy market to hit. You're interested in this approach, reach out to me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. Here's the S&P 500. Let's blow this up a little bit. So you can see basically three kind of tight days now, and that's a good thing. Before the bell, we had some strong economic data, and the indices sold off. They were already down about 0.25%. They sold off even more. Strength is not what you want to see if you want the Fed to be cutting rates, but a big change in character in the market today, at least for one day. Market completely shook off higher rates and a stronger dollar, and little by little clawed back. everything that was lost at the gap down, and then within the first 30 minutes of the day. So here you can see the open, a gap down, weak attempt at a rally, sold off 4103. We held that key 4100 level, tested it twice yesterday, got back above it. Um, Great, let's call it a goal line stand or a stick save if you're a hockey fan, whatever you want to. Then we started rallying up to 4136, put in a little cup and handle intraday here, another higher high at 4143, another cup and handle here, closing at the high of the day. You could not ask for a better response by the bulls. You can see higher highs, higher lows all day after that low that was made by 10:15 today. Very similar to how we closed yesterday after some really bipolar up and down action on the indexes after the CPI number came out. Market took time overnight to digest it, decided it was going to gap down, but when the rubber met the road, the 4100 held, and we closed at the highs of the day. And that and the action of leading stocks couldn't really have been much better of an outcome from where I'm sitting. Also, another undercut and close above the 8 EMA. This is second straight day that we did that. That's our ultra short term moving average. As long as we're above that, we have confidence with adding positions. As long as we continue to make progress with what we have, check those boxes off in the bull column. And we did add more exposure today. So there's the S&P 500. Let's go to the NASDAQ 100, looking even stronger. Low the today of today, contained by the ADMA. Relative strength over the last 2 days, again in the face of a rising dollar and rising interest rates. You can see the stochastic crossover. We have this on all 5 of the indexes as well as all 6 of the G6. So for now, the negative stochastic crossover from overbought got a reset, and we're heading back higher now. Uh, Bulls certainly are happy to see that also. Dow Jones Industrial Average going nowhere. Relative weakness the last 2 days, holding the 21, which is flattening out. The 50-day actually has rolled over and is heading lower on the Dow, but price is holding up. So at least we got that going for us, plus a stochastic cross a couple days ago on the positive side. Let's go to mid caps. Bounced at the 21 4 days ago, 4 positive closes, undercut and reclaim of the 8, positive stochastic cross. Good stuff there. And IWM, this was weak for a while. Then went sideways, showed relative strength today, again off the 21, undercut and reclaim. And now 3 days of higher high after that undercut and reclaim of the 21 with the positive stochastic cross. 5 for 5 on positive as far as the indexes are concerned from where I'm sitting. Let's go to the dollar. Dollar was strong all day with the strong retail sales that came out pre-market. The dollar gapped up and pretty much went sideways all day. When it started pulling back a little bit in the afternoon, this is when the market regained a little bit of strength. So at least for today, market up and dollar up. That's not how the correlation's been doing, and that's another check mark in the bulls column, at least for today. How about the VIX? Even when the market was down today, the VIX was weak. So you can see it breaking 1850, try to rally back above 1850. No, sir. Even when the market was down, the VIX was down. That gives you a little bit more confidence that you might see a turnaround as long as the VIX isn't spiking, and it wasn't spiking. Let's go to a daily chart for the VIX. And you can see a lower low here back below the downtrending 50-day and 21-day moving averages. I didn't show a daily chart of the dollar, so I'll show that quick. You can see it clearing this 28 level and this recent consolidation, but once again, the market shook it off today. And we're in overbought, so that's a bonus. We can hang here for a little while, but eventually you come off of that. And if we get a good move down in the dollar, and remember, the dollar sells off when there's more confidence in the global economy. So it's a very possible scenario set up, and that rolls over and starts going down. If the inverse correlation that we usually see holds, as it did here with the sell-off in the dollar. What was the market doing? Trending higher since the beginning of January, while the market was while the dollar was going lower. So we could see another move up in the market if we do in fact see that. Let's go to the bond market. First, the broad BND down, another lower low. That means yields up. Let's look at corporate bonds, LQD. Other slightly moved down. Bonds, uh, this is also good. Bond prices oversold. That means we're going to see bond rates overbought. Overbought, usually, you can hang there for a couple of weeks, but the odds are eventually you're going to roll over. So that's definitely another check mark in the bulls column. Junk bonds basically unchanged on the day. TLT, got to shrink this back. TLT down 1% on the day. Let's go to the rates now. TNX, the 10-year, up 1.28%, making a higher high. But again, the market shook it off today. 0TYX, the 30-year, up 1.37%, another higher high. One correlation that did stick today was the strong dollar, weak gold, down another percent, very oversold now, making lower lows, broken chart, needs to try to put in a bottom. Gold stocks also very oversold, but continue to make lower lows. And let's go to Bitcoin. Bitcoin up 8.6% today. I did not see this. Definitely saying risk on, and that stays in line with, actually, this may be related to a big upgrade that Coinbase got today. Maybe, maybe not, I don't know. But it was up, and it ended up being a positive close for the market. So this is highly correlated to the NASDAQ 100. So those are the major indexes that we check every day. We just reviewed the takeaways. Here's the tail of the tape. What jumps out here? There's the January retail sales up 3% versus 1.7% expected. Usually good economic news has been bad lately. That resulted in the gap down, but strong leadership closing at the high of the day. 3 days above the 80 EMA, 19 days above the 21 EMA, 28 days since the follow-through day. Here's the focus list. We'll go over several of these shortly. We made multiple buys in Airbnb following up from last night's 1%. It's now a 6% size in-house here as it continued to act well with massive volume. We also bought GFS and RVNC, something that's been in the 21 over 21 for weeks. Finally got a nice pullback to the 21 and a bounce off of there. We'll take a look at those three charts in a moment here. Bottom line, market shakes off a strong dollar and strong rates, closes at the high of the day with leadership. Bulls couldn't ask for much more than they saw today. That's what I see. Airbnb, classic, high volume, stage one, gap up, massive volume, good price action, up 16% on 472% average volume, picture perfect, cup and handle, gap out, love it. This is, if I could only pick one pattern to trade, this would be it. Airbnb act great today. One we didn't buy, but watched all day, and it had just as strong a day, although it hasn't cleared this overhead resistance back from late last year. Roblox up 26% on almost plus 300% average volume, closed at the high of the range. Arguably, this isn't shown a cup and handle. Maybe you get one on the weekly. I don't know. Let's see what we see here on the weekly. No, not showing anything there. So it doesn't technically meet the parameters. Airbnb looks much better than that. GFS, the other buy that we did today, just a small starter position. You can see the big volume yesterday, pulled back today, week early. Strength came into it. When the strength came into it, we took a 1.5% size on this. And RVNC, we've been watching it since this big move up, did some research on it. It's a replacement for Botox, fewer trips to the doctor, nice pullback on light volume, bounced at the 21 now. Very clear stop, shouldn't break yesterday's lows. Stochastic starting to hook up from oversold. A lot to like in that chart there. Okay, we showed Roblox. How about some other stocks that have been acting well? MNDY Monday. This is another day two higher high off of a gap or off of a strong move up, not a gap, but a strong move up post earnings. Let's see, FTNT continues to act well since its earnings gap. 2-day pullback near the 8, 3 days up since then. PanW. This showed massive volume patterns before. This is where FTNT gapped up, and it gapped up on that also and is also making higher highs. They have earnings in 6 days, but I want to note the big volume buying on this off of the lows. Where cybersecurity, software stocks in general are making a serious comeback. Um, I've got a bunch of charts to prove it, and we're pretty excited about the way some of these are getting ready to look like they want to make higher highs. Net, another one. Look at the volume patterns on this since its earnings. Uh, Actually, this wasn't its earnings. This was the day that social media, all of them gapped up on February 2nd. Everything social media and internet related based on Meta. Nice little pullback. Had its earnings report, massive strength, 5 days off of that. Got to find a way to sneak into this. And after hours, Shopify. Uh, Front ran earnings, it seemed like they were released early, up 6.5% today. It's given back about 3%, well, just about all of it after hours today. Let's see what happens when it pulls back to this 50 area. Should hold that. I haven't heard any details on the earnings report yet. Something else, ARC. 10 out of 10 today. All 10 of Kathy Wood's holdings were up. You want to talk about breaking a downtrend line or a bull flag? This is exactly what I've been referring to in the indexes. The indexes did break above the bull flag, but not as nicely and cleanly as this. All 10 of these stocks up today. 6 of them are in the software sector. Stochastic cross up 5.9% today, and after hours, a big holding. Roku up over 10% after hours. That's one of the top 10 holdings in ARC. So after taking a severe beating in late 2021 and all of 2022, it's Kathy's revenge so far this year, and this is honestly a really nice looking cup and handle. Early entry breaking the downtrend line there. We bought some of that yesterday. Let's see. That's going to wrap it. The only thing we had in house today that lagged substantially was ERX, as all oils were down, but it undercut reclaim the 50-day moving average. Today's low would be a stop on that position, and that's going to wrap it. And as always, love to hear from you. You can email me, Donna@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. Don't have to be a slave to the price action if you've got to stop the sell discipline to protect your downside, preserve your capital for when the market is more healthy. And with that, I'm going to wrap up Wednesday, February 15th. This is Don Vandenbord. Nothing but the facts here from Revere. Thanks for listening and have a great day.